Hello and a warm welcome to all our viewers. I am Rahi Bhattacharjee from EgoMonk. The credit environment in India has materially deteriorated during the pandemic with rising concerns over asset quality and system risks. However, it's absolutely essential to revitalize the sector if India is to become a $5 trillion economy. So today, we're examining the $700 billion NBFC sector and its recovery roadmap as it aims to return to sustainable growth. The speed of lending has been made possible by the generous support of Cashfree, and in this conversation, we will unpack innovation in the digital payments and loan disbursement arena, discuss strategies to deliver instant gratification for customers, and highlight ways in which the payment loop can be secured for NBFCs. We have with us Akash Sinha, the co-founder and CEO of Cashfree, a leading payment platform in India. His prior experiences include working with e-commerce giants like Amazon and BankBazaar. A community builder and proven entrepreneur, Akash focuses on the intersection of technology and business opportunities. Joining him in this conversation is Kaushal Sarda, the CEO of Kuliza Technologies, a leader in digital transformation for financial enterprises. His past achievements include heading the Bangalore office of 2020 Social, which has now been acquired by Publicis, as well as founding Uhuru, which is a SaaS-based content collaboration platform for SMEs. He is passionate about fintech, enterprise 2.0, SaaS, innovation and entrepreneurship. We welcome both speakers and hope the session is as interesting as it promises. Over to you, Akash.
Thanks, Rai. That was a great introduction, both of us. And welcome, Kaushal. It's nice having you here.
Hi. Thank you,
Right.
Akash. Pleasure being here.
Thank you. Yeah. So for our audience, right, today we are going to discuss on the speed of lending and how digital payments are going to help NBFC scale. But before that, I think I'd like to give a small background about where the industry is going and what happened in the industry. We'll touch base on what happened in the industry in the pandemic. Right. So if you look at NBFC as a segment, so NBFCs do 7 to 8 odd activities to function smoothly in the market, right? So they first target the customer segment, they plan on the onboarding, then they work on the digital payment side, then they do risk management, and then obviously the governance side, right? But today we are going to touch base on a topic which is very crucial for customer experience, right? Which is having a robust digital payment stack inside the operation NBFC, and how it helps NBFC disburse faster, make decision faster, and also improvise on the collection. Right. To start on that topic, right? So, Kaushal, thanks again for being here. So again, we should start the discussion with the very hot discussion in the market. So we all know, right? NBFC has been a very badly hit segment during the pandemic. We had a moratorium for more than 6 months, and most of the borrowers went stressed. We had a 40% default in month of October on NACH. So what are your ideas? Like, how do you see this industry recovering? What are the tools, technologies can they use to recover faster after their bad phase?
I think it's a very important and prudent question to sort of think about, not just for us as companies providing technology to that sector, but I think NBFCs end up having a deep impact on the economy of the country. Specifically both on the retail and MSME side. I think they end up creating opportunities of credit where your typical regulated banks aren't able to reach. So I think there's a deep impact of this sector. And I think when you have a segment like this that's impacting a space like the retail and MSME environment, the impact that the pandemic had on those customers was bound to sort of go and have a ripple effect on the NBFCs who were sort of supporting them. So I think in some sense, the pandemic there was no way it was not going to impact this sector. But I think, times like COVID have taught all businesses to spend some time and reflect, even from a sector point of view. So, if you look at this sector, one of the things really that's important in lending is on the risk allocation side, you're constantly looking at, am I allocating credit to the right set of people? And you really want to go after that good segment of customers in a way that if you can figure out and target them, then you can give much better interest rates to them. And on the risk management side, you want to basically be able to have as prudent a collection mechanism and reward good behavior of payment
Right.
from their side as possible. So I think both these two I would see as fundamental areas that NBFCs should focus on. These are times where you have to first make your fundamentals a lot stronger, look across the quality of your asset book, see and identify. If you look at every loan book is going to have that traditional bell curve of some really bad customers, a lot of decent customers, and some very good customers. So how do you identify in your book who are the right kind of customers, give the right kind of customer experience to them,
Yeah.
incentivize better payments, and then use that learning to improve who you go after from a risk allocation size point of view. So yeah, it's time to sort of reassess your fundamentals, I guess.
Got it. So you're saying reassess your risk management processes and innovate on the collection side, right?
Absolutely. So innovate as much as you can on collections,
Mm,
identify your best customers, and give them a great experience.
got it. So Kaushal, I think if we just focus on the collection, right? Even though pandemic is it like the impact is reduced in the market, but still we have a lot of customers wary of leaving their house, right? Everyone's looking for some kind of contactless, remote ways of interacting with a merchant, right? Be it NBFC
Hmm.
or any other segment. So how do you think this entire collection process should evolve to match the new behavior of the consumer, right? And what are
I
the
think
tools we can provide, so that customer doesn't feel the pain of taking additional effort to repay their loans, right? Because it's important for NBFCs to get the repayment on time.
hmm. No, I think so. There are two parts to, I guess, the question in terms of at least how I think about it. One is, when we look at the aspect of collections from the point of view of the experience of the customer.
Yeah,
You want to reduce the hassle. Uh, you know,
correct.
at these times, even those people who you're collecting money from are in turmoil, are in stress. Some people are sort of, having to live through quarantine periods, having members in the family who are going through that. So, collections has to hence be a lot more about, can it be as friction free as possible?
Right.
Um, and can I do it in a manner that I can bring in some sort of comfort of the payment schedules through which they can do it? Can I incentivize if they're able to bring in, these lumps of payment, break it into different sort of cycles of payment, create a lot of innovation there in terms of flexibility to support the customer and reduce the amount of friction they have to be able to do it when and whenever they can, and if in sort of all types of methods. So I
Right.
think that I would say is sort of one big area from the customer's perspective. Purely from the NBFC's perspective, you want to ensure that your bottom line is as efficient as possible. So, having a large field force to go and do collections, regularly having to go visits, the cost associated to that. So, how can you bring in digital in the form of either, video-based call centers, where you can connect with the customers, the ease with which, you can collect payments from that. So sort of zero touch or low touch
Mm.
collections, from a point of view of back, your bottom line efficiency would be sort of the second aspect to look at it.
That's correct. That's correct. And just on that one, right? NBFCs who have been looking to reduce their or improve their bottom line, they have been largely going digital, right? I mean, last 2 years we have seen surge of NBFCs adopting internet as a prime distributor for their loan products, right? And they're also using digital payments at a scale which we didn't see earlier, right? So they are collecting digitally, dispersing digitally, right? Verifying them digitally, and making the journey very smooth, hassle-free, and with a great experience, so that customers, come back to the platform again and take products, whenever they need it. Right? So which brings me to the second question of our discussion. So in India, we have more than almost 10,000 NBFCs in the market, right? And since you're one of the guys responsible for digital transformation, we know there are very handful of them, using the digital capabilities, right? So when it comes to digital collection, digital dispersal, how do you think the current banking payment systems, are ready to handle the scale when all of them decide to go digitally, right? Because you are the one driving, digital transformation. But imagine, rather than 100, tomorrow we have 5,000 NBFCs coming to digital mode, right? So what is your view around, can the system scale? If not, what are the things, payment and banking should do to make digital experience around payments smoother for their customer?
So I think if you look at the payment infrastructure uh, overall, I think the public aspect of the payment infrastructure or what the government has set up, I think has been fabulous. I think, and leave aside NBFCs, I think the biggest area of scale we would have seen on that has been on purely, if you look at the amount of e-commerce that's happened
Yeah.
during the pandemic side, uh, you know, digital payments has just scaled beautifully. Uh, and of course, powered by, I think, a lot of initiatives by NPCI that's happened in terms of,
Mhm.
I think, the focus, the public level infrastructure that had to get set up, the uh, enablement of them to be available on most digital marketplaces, whether it was
Right.
e-commerce marketplaces, logistic marketplaces. So I think a lot of that innovation has happened. I think where I would say the scale or innovation is still missing is more on the infrastructure needed within financial institutions, both banks and NBFCs.
Okay.
Now, here you need capability of their underlying internal stacks to be structured in a very different way. Just
Mhm.
as an example, if you have really small size payments being done by an individual, and that requires every time there is a hit that's happening to the core banking system, the current core banking systems aren't structured for being able to do that. So how do you create the right abstraction between those core banking systems and maybe some sort of an abstract layer like a wallet on top required to manage the right kind of scale throughput that you want. So there are some problems like that.
Mhm.
Then the ability to integrate payments into different aspects of the customer experience journey within the life cycle of a loan, whether it is at the time of disbursal of the payment,
Yeah.
whether it is in terms of the collection side. So I think that integration of that payment within the entire life cycle of the lending system. These are sort of two areas where I can clearly see investments need to be made in the internal systems of these financial institutions.
That's true. I think you're right on, bank. I think especially these systems, right? Especially eNACH, UPI AutoPay, which were released by NPCI in last few years. So these can really help a lot of these NBFCs automatically pull money, right, every month from their customers, right?
Correct.
And plus, you also
No,
have
and
capabilities around, sending payment links to their customers. They can pay it whenever they are. They don't have to be, in the daytime.
No, and I think that makes a difference. I think standing instructions make a difference because it just becomes that much more easier for someone to
Yeah.
be able to do. Because a lot of time we just, as NBFCs, they focus on ability to pay and intent to pay. Sometimes there is the inertia to pay, which is
Right.
just,
True. I
just
mean,
sheer, you just don't
and
remember.
and as a customer, you may miss it, right? I mean, say your
Yeah,
payment date is second or third, and you might be busy in some marriage, some travel, and you miss that date,
yeah.
right? From an NBFC perspective, they may panic saying this loan is not doing good, but customer is doing well, right? They want to pay, but they just need right tools to make payments on time.
Absolutely. And what happens in a scenario like this is they also, a situation like a pandemic like this, you
Mhm.
suddenly start overthinking as well, also as an NBFC, the guy is just 2 days late into payment, like you said,
Right.
may have just been attending a marriage and forgot.
Correct.
But, because you are in this once in a lifetime kind of situation and panic hitting everywhere, you start reacting to it in ways and which may sometimes burden the relationship you may have built with the customer over a period of time.
That's totally true, right? I think end of the day, customer is the king, right? I mean, if you give them great experience, great service, they'll keep on coming back to you. Right? So,
Absolutely.
which brings me a third point of discussion, right? I think this is the era of instant gratification. Right? You want a cab, you just hit a button, right? You want to book a flight, you hit a button, right? But how do you think that's happening in the lending space or financial product space, right? Say if I want to loan, and I hit a button. Like how many minutes do I have to wait to receive loan in a bank account? And what are the things that should happen in the background to enable this gratification moment?
So I think that question, it's very interesting because you can look at it from the point of view of what's the fundamental innovation that's happening
Yeah.
in the field of lending. The way we look at it is, if you see an economy when it goes digital, the first lever of digitization ends up happening on the identity side. So identity is sort of the first thing that goes digital. The
Mm.
second thing that goes digital after that is payments. And payments end up going digital, not only with the context of identity, but they become contextualized to the purpose of the payment.
Correct.
So if you look at what did marketplaces or digital marketplaces really do, they gave a context to which the payment transaction between two entities is happening in a digitized manner. So, if there is a merchant from whom you're buying a pair of shoes on an e-commerce marketplace,
Mm-hmm.
the digitized marketplace is able to give a context to that payment while bringing the identity into place. Now, for a lender, this is fundamentally transformatory because till now, most transactions would happen in a manner that you could never have been there at the right place at the right time with a pre existing context knowledge of what's happening. And hence, what you had to do is preempt these are the 10 types of loans that are going to happen. Let me
Mm-hmm.
define products basis of that and just build software to enable those products. With digitization and context setting in this manner that's happening because of payments, you can sort of bring financing to the place where it is happening and get the right kind of data that needs to come in. So, which is what we sort of try to term as ecosystem based lending, because
Mm-hmm.
you are lending to an individual or a party to finance a transaction which is happening in a particular ecosystem and a particular context. So, can I be integrated into that ecosystem to get the relevant data,
Mm-hmm.
being able to price and underwrite the risk, and
Mm-hmm.
make a decision making access to capital available at the right place at the right time for that transaction to go through?
Got it.
So, I think fundamentally that's a massive area where I think impact in the space of lending can happen, and how lending can leverage, I think, the innovation on payments, both in terms of speed of payments and access to context of payment, uh, uh, that can be used for better underwriting the risk.
Got it. It's like be present where there is a demand and where you think there would be a demand, and be ready with that data that can help you process their verification faster, do your underwriting faster, and disperse
Ab-
money, like instantly to them.
Absolutely, because that's where the person needs the money.
Mm-hmm.
And if the person has a sensor, in fact, one of the products that's seeing tremendous amount of adoption, not just in India, but across all emerging markets where we're working with our customers, has been buy now, pay later sort of
Okay. Yeah.
products where, and the interesting thing is it's happening in the B2C space. It's also happening in the B2B transaction space, especially around areas of supply chain financing or anchor dealer based structures. So I think the whole concept of integration into payment environments is sort of a big area of work in the lending scene.
Got it. Great, Kaushal. I think this has been very helpful to set the context right, and I'm sure it will be helpful to all the other budding companies who want to get into this space. Right. So we will. So yeah, I mean, we have gotten few questions. We're doing a discussion from our audience. I'd like to pick a couple of them and
Mhm.
see if we can do justice with those questions. Yeah. Yeah. First one is pretty interesting, and I think it's very outcome oriented. So the question is, what are the benefits NBFC can get if they transform their services digitally and start adopting digital payments in the process? Right. So if you can quantify in terms of cost, in terms of growth in customer, I think that would be a very helpful answer.
Sure. So I think I can see immediate impact from a bottom line point of view,
Mm-hmm.
which is both in terms of the cost to dispersal and the cost to collections. I think is important. The other important aspect is that because the collections is completely happening through digital, I can leverage the data from that to far better create subtle understanding from an early warning system point of view. So if I want to be able to leverage machine learning to identify potential areas of risk with a particular set of customers, and use that data not only to improve the way I'm going to do my collections, but also try to sort of figure out behavioral trends that I can incentivize to transform, decent customers to great customers.
Understood. I think you covered the revenue part. But I think there's also advantage on the experience, right? I mean, as a customer, I'll have a great experience. I don't have to talk to multiple agents over phone. I can just use an app, use a PC, and receive money, instantly in my account, or prepaid seamlessly just from my home, right? So I think this will also help NBFCs, compete better in the market, right? This is again very competitive environment, not to
Very
highlight
competitive.
out,
Absolutely.
and you have to win
No, and
your
I think,
customers so that they stay with you, like for a very long time, right? And that can
no,
only
absolutely.
possible if you give great experience through digital means.
No, and I think that's a lot of times it's a very undervalued point. And
Mm.
like you mentioned, this is a very competitive landscape.
Yeah,
We're talking about 10,000 NBFCs
correct.
registered with RBI, and many more coming. And yes, there is a large credit gap from a structured credit environment point of view. But I think you cannot diminish the value of a great customer experience, because there is a cost to acquiring a new customer. And if
Mm.
you're able to create a great experience, you can contextualize and offer many more products of relevance to
Correct.
that individual. So I
Correct.
think hence the value of the customer experience has a significant impact on the CAC for the NBFC.
Mm. Great, great. So I think we have a similar question. I was anyway coming to that point naturally. I think anyway, I'll pull that up. So, what do you think would be the cost of organization if they want to digitize their collection and dispersal process? I'm sure you would have helped many such organizations in this journey. So, what kind of cost do you think they have to? Because this is one of the major question when any organization has to think about transformation or making any significant change in their operation.
Yeah, I think it's important to also, I think, look deeper into what should be termed as costs.
Mm.
Because some of the costs are related to, of course, the software, onboarding a new piece of software, migrating from the old software to the new software. So I think there are some costs
Okay.
associated with that. There are also costs associated with change management. You have to ensure for the right kind of adoption of the new software, the new processes. You have to create a sense of value for change. So how you have there are sometimes exercises on redesign of your org, sometimes exercises on redefining incentive systems for the collection teams, not only within the organization but also with partner organizations that you work with from the collections perspective. So I think I would look at the efforts on all of those things should be considered from a cost point of view. Uh, but I think another good thing to take advantage of, and we've done this with some of our customers, is
Mm.
you know get started somewhere, experiment,
Right.
refine. So you could
Right.
take, let's say, if you've got 30 branches, take two branches and sort of do a pilot, do it well, see how it's having an impact on your collections, and then sort of gradually scale up.
Correct.
I think some of those sort of, an MVP based approach and then sort of scaling
Mm.
uh, has sort of been far more prudent an approach as opposed to
Mm.
going sort of a complete big
All in.
bang, because then the effort on change management can sometimes be very, very significant.
That's a fair suggestion. I think as an organization, you have to upgrade a lot of your supporting product and feature to plug it in digital payments, and it makes sense to test the waters. But you are suggesting everyone should take that leap of faith, and instead of brainstorming longer just to decide whether digital payments is good for them or not.
No, I think, see, the problem is not just whether you want to do it or to integrate digital
Mm.
payments. You have to maintain a certain standard of experience that the customer is used to.
Correct.
So, the definition of the experience you want to create is always relative to what that customer is experiencing everywhere else.
Any suggestion from your side, Kaushal? Right. So if I am an NBFC starting today, right? Let's take example. So what would be suggestions for me when I have to adopt digital payments and or digital tools in general? Like what are the things you'll want me to focus on so that I can make my customer journey smooth, be it dispersal or the collection?
So I would say, the place where I would start, or what we recommend to any NBFC that we're working with is, really identify who your ideal best customer is,
Mm-hmm.
and what's his life like. How deeply do you understand that person? What are the kind of places that person needs access to financing? And once you have that sort of fundamental underlying construct, as an example, plus an understanding of the life that that individual leads, and where all do digital end up making an impact in his life currently,
Mm-hmm.
then from that you can craft the experience you want to create for that individual.
Got it. True. Yeah, just what I think there would be few flows which would be common irrespective of the customer. I think that would be more on instant dispersal, right? I mean, no matter which TG you're targeting, you have to
Yes.
make sure they're getting money faster in the bank account. And I think especially on the collection side, you have to be mindful about your TG and their familiarity with the payment channels.
Yeah, I think on the just one point on the dispersal side, I think especially one of the things that the pandemic has brought out criticality is
Mm.
making a few products which are on the healthcare financing side, which is
Yes.
people needing access to capital in a very critical time, which are slightly people. There are loan products around underserved market access to healthcare related capital. Around
Mm.
such times when the guy is standing in the hospital and needs to get an admission for a bed,
Right.
access to that capital with instant disbursement can is literally matter of life and death. So at some time people may think that it's just disbursal of money, but in certain context the criticality of instant
Correct.
disbursement can be very, very high.
Correct. I think so. Urgency would depend on the use case, and in this case, I think it's as you mentioned, right? I mean, matter of life and death. Great question. I think we are done with the audience question. For rest of the viewers, you can still drop your questions. We'll try to get back to you, in the best possible way. So, Kaushal, I think I'll just try to wrap it up. I think you have shared a lot of good insights. You have shared about be present at the ecosystem where demand is present and add context to your lending product. Right. You also touched upon the digital transformation, right? Innovative ways of underwriting, innovative ways of risk management, innovative ways of collection and dispersal. Right? You also touched upon on the buy now pay later, which is very interesting model coming up in this space. But I still feel I think a lot of NBFCs are not on there. There are a lot of modern lending companies who are trying this experiment a lot. And
Correct, correct.
lastly, we
That is
also
true.
touched upon the competitive escape of the market and focus on experience, LTV, right? So anything else you want to add apart from this before we take the break?
No, I think it was a fun conversation. I think we got a chance to discuss on a bunch of things.
Yeah,
These are very hard times for a lot of businesses across the country and NBFCs as well. But I
yeah,
think the businesses that focus on the right fundamentals and invest towards focusing as much
huge.
as possible on relationship with their customers are going to
Yeah,
deeply benefit. So yeah, it was a fun
true.
conversation to have.
Thanks, Kaushal. Thanks a lot for your time.
Thank you so
And
much.
thanks to viewers, yeah, for watching this
Thank
webinar.
you.
Thank you.